All right, what is up, traders? Happy Friday. Hope you all had a fantastic week trading and out in the real world. It's Robert Falco from Real Life Trading. And before we get started, don't forget to smash that subscribe button, like the video, and then you can comment down below on any other stocks you would like us to review next week. Just a reminder, next week is Thanksgiving week, and our trading rooms will be closed Wednesday, Thursday, Friday. And we hope you all have a fantastic Thanksgiving holiday with your friends, family, and loved ones. The market will also be closed Thursday and a short day on Friday. I think it closes at 1 p.m. Eastern, if I'm not mistaken. Here's the SPY, a little bit of a small gap down, and then just kind of ended with this little doji. Not much to say other than, we're up near all-time highs. I got a target of 491 by the end of the year. If it hits that, I'll definitely like to take some profits on the SPY. I don't think that we're going to hit that, but you never know. It would be nice to actually pull back to the 20, which hasn't happened in about a month, but things still look pretty bullish out there with inflation raging. Assets have to go up, and that includes stocks. Here is the Qs. So the NASDAQ really led by big tech. We'll look at, one of those today with Amazon, but new all-time high close today with this little doji as well. Here's the IWM, broke out, obviously needed to pull back. That's what it's doing. I did add a little bit to a longer term IWM position. I'll add a little bit more down here, and then I wouldn't have alerts to do anything with those additions unless we come down and, break this little pivot and start closing below the long-term moving averages, that kind of thing. But I think this is a breakout retest, and then eventually the IWM goes higher. Amazon, I know yesterday was a huge day for Amazon. It did have a little bit of a run up today and got very, very close to a new all-time high. Looks like 3,762.15. So what is that? About $10 away from a new high, and then pull back a little bit. I expect it to retest a little, but I do expect Amazon to continue higher. I think you want to be in. It held this level down here, rotated, gap down on earnings, got bought up, S-curve off of these, prior resistance and becoming new support, bounce, and then broke out of this little pennant pattern. So Amazon looks like it's going to go higher to me. Plus we know that they have Christmas season is upon us and a potential Santa Claus rally. I know there's supply chains and all that kind of fun stuff, but I do think Amazon is probably going to have a good quarter. And since they lowered guidance, I think that could end up setting them up in the first quarter of next year to report really good numbers because they kind of lowered the bar a little bit. Let's go over to one that's not looking as good. I know we've been getting a lot of questions about Roku. Personally, I am not in Roku. I got out of Roku over here. Oh, wait, that was this earnings. So it was this earnings. They warned on their earnings, and it looked like it was going to start to bounce. And then we took out this bullish candle, and I ended up just getting out of my Roku position because it looked like this trend was going to break. The trend did break. It retested twice, actually, and then rolled over. So, yeah. Roku, the trend is your friend until the bend in the end, and this thing has bent over and broken, and I think Roku's going to go lower. I think 220, and then probably 170 to 185 is definitely possible. Their earnings weren't great. They guided down, and there's just a lot of competition. I'm not sure how much of a moat they really have. So if you're in Roku, I do expect a little bit of a retest. Maybe that's when you want to buy puts if you didn't get any over here, but it was just a really disastrous gap the other day when they got downgraded. Here is Disney. So Disney, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 black candles, 10 bearish candles in a row. I do have a December put sale at 150 on Disney. It is pretty oversold, I think. Yeah, pretty oversold on RSI on the daily. So I do expect Disney to have some type of snapback rally, and then hopefully it comes in for a double bottom and bounces. If not, I'm cool with owning some Disney down around 150, retests of these old highs. I'm glad that this gap filled just so that way that's out of the way. But I do think Disney, I wouldn't be, amassing a huge position down here, but I do think that this one is dip buyable. I'm personally looking to get some down around that 150 with the put sale or some limit buys. Here's PENN National Gaming. Here's another one that had a hell of a run from COVID all the way to the high, and it has pulled back pretty substantially from this all-time high. We're down 63%. This was mid-March to now. We're down 63%, but the trend is broken. If we don't hold this 52 area, I don't see any reason why we don't come back down to $40. So just be very careful with PENN. This could easily come back into 40 and then hopefully it holds there, but we'll see. It could reverse and, then hold this $52 level, but you have this prior support where it held. Some of these, it's right at it right now. We'll see if it breaks here. It's probably going to go lower. DraftKings, this is another one that it seems like it just going down literally every day. The trend from this is obviously busted. It even put in a little bear flag pattern right there and broke down and has continued, just continued lower. So yeah, I don't see why this one doesn't come into like 32.50 to 35 in this area. I think you'll get some type of temporary bounce. Then you want to see a double bottom with like a higher low and then, chop around and slowly grind higher. This is not just going to V bottom out of here, I don't think. It's not the same type of market that we had back in 2020. And yeah, I think DraftKings is probably going to end up coming a little bit lower. So again, if you're trying to catch some of these things, I don't think these are dips once the trends are broke and, we're below all the moving averages. Pretty much every trend line you draw, it's broken. So at that point, you're trying to catch a little bit of a falling knife. And if you're going to do that, I think that that's fine. You don't want to catch too many of them, but you want to do it like really, really small. So starting with just a few shares. If you want a 100 share position, let's say, maybe you buy 5 at a time until it shows you that it's going to base and actually start to bounce. But otherwise, be careful just grabbing these off of, a quote unquote support, like let's say this 34. And then we break there, and I mean, heck, DraftKings could come all the way to $20. I don't think that it does, but if it did, like, it definitely could. It definitely could come all the way back to $20. I don't think that it's going to, but that's why I wouldn't buy a large position right now. I would just personally start relatively small. So that's it for this Friday stock review. Don't forget to live life, trade it. Have a happy Thanksgiving, everyone, and stay safe. Thanks so much.